Yeah, good day, traders. So now I want to introduce you to the concept of VECA concepts. So is that the VECA or we call it Wake Up Market Structure concept. So now we'll be talking about the bullish breaker and the bearish breaker. So I'll explain both in the bullish environment and also in the bearish environment. Now looking at what is a bullish breaker? A bullish breaker is a shift of trend. So it's a move that breaks the bullish order flow. So like we understand earlier, an order flow is the one that comprises of higher highs, higher highs, higher highs, higher highs, and higher lows, higher lows, higher lows, higher lows. So now looking at this particular move now, you can see this is an LD uptrend, a LD bullish order flow. So now the breaker is the move that takes out the previous low. Now looking at this point, this low give birth to this high, another low give birth to a new high, another low give birth to a new high. Now this low is taking out the previous high. Instant. Now we have the market breaking this low, taking out the previous high. So in this kind of move, what you anticipate is that the market, after breaking a previous low, the market should retrace back to that broken low. So that point is what we call the breaker. The point whereby the market invalidates or takes out the previous low is what we call the bearish breaker or BMS instant. So now the same way it applies in the bullish environment is how it applies in the bearish environment. Here we have series of lower lows, lower lows, lower lows, lower lows. So the market creates a new lower low here again. But as the market is about retracing to this point, the market should have just retraced to this point and then drop. But instead of that, the market broke this high. So meaning the market is taking out this point. At that point, we have a breaker, meaning the market is now changing from a bearish environment now changing to a bullish environment, and you can see how the market unfolds. So that's just the explanation of the breaker. So the breaker is the last point. So even in the BCMM concept call it LSB. LSB is the last step broken. You understand? Last step broken, that's the meaning of LSB. So you can just call it based on the different trading concept that we have out there. You can call it anything you like, but all matters most understanding the concept. So in a bullish order flow, the move that truncates the order flow is what we call the breaker or the BMS. So now how do you trade this breaker and how do you time your entry? If you are trading the breaker or the you want to trade BMS, for instance, now look at this market. The market is in a very healthy bullish trend. You can see that. Okay, let me just zoom that. The market is in a very healthy bullish trend, and you can see this move taking out this low. Immediately the move takes out the low, how do you take the trade? Now you are no longer buying, because in a bullish market, definitely should be thinking about buying. But now the market has taken out this low and is about retracing. So now in this case, what do? You make use of Fibonacci. Is either you make use of Fibonacci or you take a trade off this point. Instance, so probably you learn during your retail M&W pattern. So if you're trading retail M&W pattern, you would understand that this point is the apex, or you call it neckline. And definitely what you want to do from this neckline, you want to take a trade from this neckline. So when you trade the breaker, so you're taking a trade off this point, that's the zone, that's the breaker, you understand? Or you use the Fibonacci to time your entry. Probably along this line, there's an order block, so a bearish order block that you take your trade from, and then off you go. So that's how you trade with the bullish or bearish breaker. So if I was going to use a Fibonacci here now, normally if I was going to take a Fibonacci on trend, say the market is moving from this point to this point, I want to take a trade. So I will take my Fibonacci from this point to this high. Then the market is bouncing off the 50% Fibonacci level. Instant. That means I'll take another buy from this point. Then market creates a new high, isn't it? Now, when the market breaks um structure. At this point that the market has broken structure, how do? So you just take a Fibonacci from this high to the low where the market has broken the structure. Then you get a retracement information how the market will trace back to either of these levels before dropping down. So that's how you time your entry and how you can actually make a lot of um very good trades using the breaker concept. So the same thing that applies to the bullish breaker applies to the bearish breaker. So you take your trade when the market beats the structure point, the market's coming back, retracing back to that point. You take your trade off that point, and then the market begins a new trend. Or you take a Fibonacci on the retracement on the breaker move, instant, the impulsive move that breaks the structure. You take a Fibonacci on that point, and then off you go, you trade it. So that's how you can time your entry and how you can trade the breaker concept. Most times you can wait after the market takes out an eye. You could actually wait for the market to retrace back to the neckline, or you call it the structure point that was broken, and the market should at least create an 1 2 3 4. So market is creating a 1 2 3 4. Probably want to take out the trade of the 5. So that's how I could have traded it's just for more confirmation and more conferences. So that's why that's how that's standing at the explanation of bearish and bullish breaker. So now moving on to the charts. Okay. Let's just look this up. Now looking at those points, looking at this, the market is in bullish trend. You can see the market creating high, and higher highs. So now, how do you know that this market has changed the trend? So let's see how the market unfolds. It's still creating high, the market still creates high. So the recent structure point is here. Stand. That was the recent structure point. Now the market distributes inside of this structure point, and you see the market taking out this high and this low. Now that's the structure point. This is the breaker here now. So now after the breaker, I told you after the market takes out the low, market retraces. Market now is retracement to this point. So that's just a simple explanation of what this means. So now here you have it. So, so if you have any question about the bullish and bearish breaker, so you can ask. Thank you.